presentation with the group. So what I'm going to do as the CEO of the Macon Club is just kind of walk you through some of the things that we have been working on over the last couple of months, just to give you an update, to give you a general sense of some of the trends and some of the actions and activities that we have coming forward. The way our organization works is we have association members all over the world. So this particular one is reaching Europe and North America, and there are times when we reach Australia, New Zealand, and Asia. And so what we try to do is to record these sessions, and for those who are interested, they are available to you. And since you are all members of HSBC, you have access to all of our tools, all of our webinars, consultations, anything that you need to address any questions related to modern slavery, human trafficking, child labor, human rights, et cetera, et cetera. We are here to support your various activities. So to begin with, just to give you an update, we recently redid our modern slavery typologies report. In fact, it was done by, initially, the first draft was done by an HSBC person who was a volunteer, and she eventually became a staff member of the Macon Club. And then we had an ex-HSBC person who also came and did the second incarnation of this. The report is about 75 pages long. It provides about, I think, 12 or 14 different typologies related to modern slavery. Goes into the red flags, and it is the closest thing to what we have in terms of a cutting edge document that really kind of focuses on, what do you need to know related to modern slavery for compliance officers, risk officers, and so forth. In addition to this, we've been doing a fair amount of work with addressing the issue of human trafficking into scam centers and also scam prevention activities. And so we've developed commercials. This happens to be a commercial that we were nominated for an award on, that basically helps young people to not buy into the fact that if a job seems too good to be true, it probably is. And in this part of the world, there's over a couple of 100,000 young people who have been tricked and deceived into scam centers in Cambodia, Myanmar, Laos. Now we're seeing it in Bangladesh, India, Nepal, Dubai, parts of Africa, and even in Mexico, there were a couple of cases, and some other Latin American countries. And so these particular prevention materials are available in multiple languages. Another version of this is an e-learning version of this particular topic, and it's in multiple languages. While I'm not sure it's in Spanish or Portuguese yet, we certainly are willing to prepare this in those various languages as well. And the idea is just to help people to understand what they need to know about how to prevent themselves from getting trafficked, and from the scam side as well. The scam, anti-scam version of this was just completed, I think last week, and we're in the process of putting it into multiple languages. So this is a public service that the Macon Club offers. I'm also doing a fair number of talks related to this particular topic. I presented, for example, at HSBC in the main building here in Hong Kong, and about 1,100 people attended, both online and in person, for that particular talk. Another kind of interesting technology that we're focusing on are AI videos that allow us to have production value that is much higher than kind of a standard webinar type presentation, where we basically identify a 2 or 3 minute video script, and then we identify an avatar. This particular individual you see here who would be speaking looks like a real human being, but it isn't. It's an avatar. But that person can speak in whatever language you want them to speak in, whatever accent, whatever gender you want. And it allows us to pull together very quick, easy to present videos that can be tailored in multiple languages. And so, for example, in the banking sector, we recently did a couple of versions of this for money mules, and these are available to you. And if you have suggestions of other videos that you want, let us know what the content is, and we can prepare these things. And again, it could be in multiple languages, and then you can do whatever you want with it. It's a nice way of sensitizing your people in your organization related to kind of topics that are of relevance to where you want your community to be in terms of general understanding. We're also in the process, it's hard to see this particular visual here, of doing typologies for scams and scam centers. We are working with survivors who are helping us to identify how the process works. And interestingly, organized crime is pretty organized. Some of these scam centers that we see in this part of the world have divisions and supervisors and managers and all kinds of other jobs that people have, and they're helping us to understand that so that we can then identify what are the typology red flag indicators so that we can pass it back to the financial institutions to help them to figure out what they need to do in order to address this. We received some money from the U.S. State Department to basically bring private sector organizations together. This would be banks, the crypto community, social media, financial transactions, law enforcement, anti-fraud, anti-crime groups will be convening in Asia to basically see if we can come up with a collective response to how to address the issue of these scam centers and scamming and so forth. And we're planning to do something similar for other typologies related to modern slavery. And the idea is to move beyond the silos of, banks and financial transactions and all these other organizations doing this separately to combine efforts and see whether or not we can come up with a more robust, impactful response to addressing these topics. We recently went around to our association members and beyond to identify what topics they want to have discussed related to human trafficking, modern slavery in the financial sector. And as a result of that, with some money from the Australian government, actually, Foreign Affairs, we have a series of sessions that will be beginning this month and then going until February. You can see the titles that are on here. These were recommendations and suggestions that came from the banking community in this part of the world. But since we have people from North America and South America on here as well, if you have suggestions of topics, we will find expert presenters, and it'll be presented both in the Western Hemisphere or North America and Europe and Asia and the Pacific and so forth. And the idea is to try to get as much of the cutting edge information as needed in order to address the needs, the requirements, the questions that our association members need. So with that, I'm going to just stop. This is just a quick update to give you a general sense of some of the things that we're doing. Are there any questions related to that before we hand it over to Balki to do her presentation? Okay.
No for
So
me.
I'm going to stop there. And Balki, if you could introduce yourself and then go right into the presentation. And I'm sure all of us are very interested to hear what you have to say. Thank you very much.
Sure. Hi, everyone. My name is Balki Aydin, and I'm a senior financial crime compliance advisor at the Mekong Club. I have over 14 years of experience in global management consulting that I have worked with various banks all around the world, were in their AML compliance programs and the strategic oversight of their programs, and provided services for their global financial crime programs. So during this presentation, I'm going to talk about the cryptocurrency and the banking risk management. Let me start with sharing my screen first. 1 second, slideshow. Yes. Hold on, screens. Let's start with, sorry. Yes. Presenter view. Sorry about that. We did this before, and play from start. Okay. Can you see my screen now?
Not yet, bulky.
Not yet.
There it is.
Okay, here we go.
It's
Can you
okay.
see it now? Perfect. Yes, sorry about that. So during this presentation, I want to talk about the four topics. How do criminals use cryptocurrency for sex trafficking, child exploitation, and forced labor? Because I think in general, we talk about these things, and usually banking system also talks about these things, how they become a victim of it. But I think with the rise of cryptocurrency in our daily life, in our financial system, it's not being talked enough how cryptocurrency is being exploited by criminals to move the illicit proceeds of their exploitations of people, and how it touches the banking system at some point throughout the circle. It is important, but one thing that I have noticed, we talk about crypto separately, banking separately, but we do not talk about how they actually touch each other. And I think this is something we are going to see more and more going forward. And I'm very happy that we're going through this right now. So maybe to raise a little more awareness about what's going on, what can banks do to learn more about crypto, how they can prevent themselves from becoming a victim, what do regulators want, and also what precautions you can take. So we will go through those during our presentation today. And right now, in the next one, we will start with how do criminals use crypto for sex trafficking, child exploitation, and forced labor. Since Matt already talked about them, I'm not going to get into detail of the humanitarian part of it. I want to focus more about the financial and compliance part of it, like how these people, when they conduct these horrendous crimes, how do they move the money? Because as we all know, the main purpose of these criminals is to make money and at some point use that money to take it out of the hidden system, integrate it to the financial system, and at the end of it, use it, move it, and share it with other criminals. So under this part, I want to give a little more information about the cryptocurrencies. So I'm not going to get to too technical details, but I want to talk about the pseudonymous and anonymous, potentially anonymous characteristics of crypto, like kind of like how it works, and its global reach via cross-border transactions, and how it is different than traditional banking international transfers. And then the unregulated exchange exploitation. There are unregulated crypto exchanges in the world, which again, which is still very different from traditional banks. And then I will talk about privacy coins and mixers, which will give us more information about the secrecy of cryptocurrency when it comes to some privacy features of it. Again, I promise it's not going to be too technical, but I think it's kind of necessary for the banking industry to understand the crypto part of it. So let's start with, I want to start with the placement, layering, and integration, which we already know, which is very common in traditional banking. But I wanted to show it how it works for the crypto criminals. As you can see, it's kind of the same circle. As we all know, we are very familiar from like the banking compliance, but initially the collection of dirty money. And then they convert the dirty money into cryptocurrency. At this part of the placement, banks might be a victim. Then it comes to layering. They use intermediate services to hide the origin of the money. And usually at the layering part, cryptocurrency exchanges gets into the picture, like with the movement of funds in different countries, different wallets, different exchanges. And then comes the integration part, which banks are most likely to be a victim. They convert the cryptocurrency into the bank accounts. They transfer it into different bank accounts might be in an offshore bank, different businesses, individual accounts. And after the integration is completed successfully, then they can actually clear the money and make the necessary transactions that they want to. But after the integration, it's very hard for the criminals to get caught and just like for banks to act on it. So that's why we need to be very aware and knowledgeable about the crypto risks to banking industry so that before the integration is completed, we can take necessary actions at banks for that. So I want to switch to the anonymity and pseudonymity part of it. So you might have heard of it. Everyone says that there's nothing completely anonymous when it comes to crypto, and which is partially true. But I wanted to say both anonymity and pseudonymity because there are some coins out there, unlike the very well-known Bitcoin and Ethereum, we all know, they are with high secrecy, high privacy, very hard to trace, and they are almost anonymous, which we are going to get to later in the slides. But I want to say here that criminals exploit the nature of cryptocurrencies to hide their identities and activities. And someone who is anonymous, let's say in a very normal daily life example, if someone is anonymous, they can make statements, they can operate, speak, but we cannot identify who they are. It's just like the description of anonymous. But someone who is pseudonymous, they operate or speak in a way which can be traceable, identifiable, and it might lead us to the way that who they actually are by the traces that they leave. It's like it describes a fictional persona without revealing their true identity, but you can still trace it. Currently, the biggest cryptocurrencies, again, such as Bitcoin and Ethereum, they operate as pseudonymous systems. So we don't know the identity of the user, but their activity is linked to their wallets, which means whether we don't know the identity, in a blockchain system, we can trace their transactions. We can link different transactions to the same identity, which would make it easier for regulators and also technology companies to trace some of these transactions. But some cryptocurrencies designed with anonymity and privacy in mind, which some examples, Zcash, you might have heard of them. Zcash, Monero, Grain, and Beam. And they are very commonly used by the criminals all around the world, and which we will get to it when we get to the privacy coins section. But this is the first one that we need to learn more about, like the characteristics of crypto. The second one is global reach via cross-border transactions. So as everyone in this presentation knows from banking, when you send money from one country to another, especially if high-risk jurisdictions are included, there's a lot of steps in it. Like there are intermediary banks, the transaction is being monitored by your automation systems. You check the identity of the customer, the business, if the transaction is consistent with the business activity, etc., customer activity. But when it comes to Bitcoin and cryptocurrencies in general, this doesn't exist. This type of due diligence, this type of tracking, like digital assets, and move in a nearly instantaneous way. Like the transaction you send, and it's like almost instantly can get into the other person's wallet and anywhere in the world. And this is a great thing for criminals who tend to exploit this structure of cryptocurrency, especially to move funds across borders with high-risk jurisdictions to avoid the scrutiny that traditional financial system might apply to them for their cross-border transactions. So this is like a characteristics of crypto that's being exploited by the criminals. And in the next one, there are unregulated exchange exploitation. So there are regulated and unregulated crypto exchanges. Without getting into too much detail, for example, Coinbase, as we all know, is a regulated exchange. Or Binance lately is a regulated exchange. So what does that mean? Like they have AML programs in place, They have transparency to some extent. They have, most importantly, KYC and CDD programs. And like they are trying to some extent, track their customers. But when it comes to unregulated exchanges, which is usually in high-risk jurisdictions in the world, they have high risk of money laundering, almost non-existing KYC for their users to open accounts and move funds, mostly exploited for sanctions evasions, and they have very limited transparency. And of course, as you can imagine, criminals use these non-compliant and unregulated exchanges, and most importantly, they cash out funds at these exchanges and then in the last step move it to the banks. And the next one, privacy coins and mixers. So as we briefly talked about in a couple of slides before, like Monero, Zcash, privacy coin is a type of cryptocurrency, like Bitcoin, like Ethereum, and they are designed to provide enhanced security, privacy to their users. And unlike Bitcoin, the transactions are recorded on a public blockchain. These privacy coins use extremely complex cryptographic techniques to ensure that they remain untraceable and they remain private. And criminals, which is not to our surprise, go to the privacy coins so that they can like hide their traces when they're moving funds, like for anonymity and reduced traceability. Privacy coins can be considered like cash. As we all know, cash is very hard to track cash, almost impossible at some point. So privacy coins are similar to cash, but within a digital ecosystem. And there have been a lot of like debates regarding privacy coins. Some exchanges do not support privacy coins. They do not allow their users to privacy coins. And some exchanges do not do anything. They just provide services. And so we will get to that later. But if you ask how privacy coins can be a threat to a bank, what people do is they use privacy coins and mixers, which is a little more technical term. They bring a lot of coins into a pool, use mixers, move the money around, and distribute it to their owners again, how a mixer would be. The scary part here is criminals get a privacy coin and then in a different exchange all around the world, transfer it into Bitcoin, which is a more accepted Bitcoin around the world, which is much more easily can be transferred. And then they use that Bitcoin and take it to a bank sometimes and say that this is my Bitcoin and I'm going to move, let's say, my 100 Bitcoins to my account. And as the bank compliance department, you might not, it comes to you as a cash, but if you were to track it a little bit, you see that it was Bitcoin first. And people are not that suspicious of Bitcoin as they would be as of a privacy coin. And criminals know that, and they definitely take advantage of it. So, I mean, just like to say it, like maybe in a sequential way, they buy Monero or Zcash and then convert it into Bitcoin or Ethereum on exchanges that support privacy coins. And then they transfer funds to a centralized exchange, like again, very well-known ones. People are trusting them, like Coinbase, or it might be Kraken. And then they sold Bitcoin for fiat currency, USD, Euro, etc. And then they withdraw the funds to a bank. And when it cuts to the bank, and if it's clear, doesn't create any alert, transaction monitoring alert, or any suspicious activity, then the integration stage is completed for these criminals. Like at displacement, layering and integration section is kind of completed at that. And in the next one, our question is, okay, we now know a little more about cryptocurrency and how it touches the traditional banking system. So how can we detect suspicious funds that are transferred from crypto exchanges to our banks? How can we protect ourselves? How can we be more aware? And what I always say that it's actually not completely different from your traditional risks. Like high risk jurisdictions is also a risk in a traditional compliance program. Unusual transaction activity, like you see that a person who has never used a crypto transfer before, all of a sudden starts receiving funds from a crypto exchange in significant amounts, which is not consistent with their occupation, their income, their traditional way of banking, and it should trigger an alert for a regular unusual transaction activity, but it's also suspicious because crypto is involved. And then multiple account linkages that criminals always exploited as well. As you all know, when we look at some alerts, criminals sometimes open multiple accounts and move funds to those accounts and then just transfer them all into one account. Like you can track them from their social security number, phone number, addresses. There are different ways of identifying criminals that open account under different people's names, but all get together. So it's just right like that. Multiple account linkages, and you see that maybe 5 people receive the same amount of transactions from the same crypto exchange in the same day. And all these funds are transferred to a different individual, goes into one person, which very developed transaction monitoring systems can easily track at this age. It's also important, and the IP addresses comes into the picture. Especially, this is very important for the avoid sanctions from sanctioned countries. It might be account fraud, and someone can steal their account and with the connect from a different country. So if you see that through systems that different IP addresses are used for a regular customer, and then followed by transactions, especially to different countries, again, an unusual transaction activity. It's a very good triggering thing to see that, okay, this might require a little more like explanation from the client, or we can dig deeper to see what's going on here. Has this account being like stolen by someone? Is there fraud, identity fraud here? Another thing is rapid conversion of funds from cryptocurrency to fiat. So what we see is what happens that so you see like a transaction of funds come into your account, right? Like say $100,000 worth of US dollars is transferred to someone's account from a well-known crypto exchange. And then this is unusual. And when you actually can track with the blockchain technology, if some banks are like kind of implemented, if you also correspond with the exchange, if they're willing to provide you more information, if money comes into a crypto exchange, $100,000 worth of Bitcoin, and the next day it's transferred to a bank, and the next day it goes from one person to another. So you can usually see very rapid movement and conversion of funds. It can give you a big picture and you can say, okay, there's something wrong here. And there might be like a suspicious, potentially maybe criminal activity here. And one thing that is also related to unusual transaction activity is the sudden activity in new and dormant accounts. And we have been seeing this a lot when it comes to elder financial exploitation. As you might already heard, older people are being exploited by criminals because they are not very tech savvy, and people reach out to them either by phone or literally like making friendships with them and get access to their accounts and open online accounts for them and literally move their existing, usually large amount of funds to their accounts, acting on their behalf. And those elderly people usually don't even know what's going on because they do not use online banking. They do not check their bank accounts as like younger people would. So if you see a sudden activity, it might be crypto activity, especially transfers in and out for someone who is not likely to be engaging in crypto, might be age thing, occupation thing, or never conducted a crypto activity before, and you see that all of a sudden funds are coming from crypto exchanges or funds are going to crypto exchanges, and there is a rapid movement of funds. This is also an like a risk, that's something that banks should think about. Okay, is there something wrong going on here? Maybe I need to look more into it. I need to dig deeper in it. I want to talk about a case study. So it's like $100 million dollar was stolen from a Hong Kong crypto exchange in 2018. So in 2018, two criminals stole around $100 million worth of crypto funds from a Hong Kong-based exchange. So they used what they did was they stole the funds, and then they sent the stolen funds, which we're talking about a very significant amount of money, like $100 million. They opened hundreds of different crypto wallets in different exchanges. It's just like some of them are single-use wallets. Again, another highly private, risky thing. So they opened hundreds of accounts, moved the funds to different exchanges, and transferred it like from one exchange to another to literally make the tracing as difficult as possible. And what they did next is they used fake IDs to open crypto accounts at unregulated exchanges. We talked about before, what it means is they do not require KYC. Sometimes you do not even need an ID scan, like to open an account from your phone. It's just as easy as that, some exchanges. So, but they obtained fake IDs, opened accounts in not strong KYC or monitoring systems. And in the next one, they converted crypto into fiat. And then what happened is, which is relatable to banks, they opened many accounts, like if not, make close to 100. They opened accounts at 9 different Chinese banks under their names, and they use fake IDs as well. And they transferred all $100 million to banks. And at this stage, integration of the funds were kind of complete, and the money was stolen from a crypto exchange. It went into 9 different Chinese banks under different names, and the money was stolen. But one thing, it was claimed that the money was stolen by the North Korean crypto hacking team known as Lazarus Group, which is like a very notorious crypto hacking group that is just everyone knows, especially in this field. And so what did they do by this case study? Like they cover up their trail to avoid detection from investigators. And there is a method called peel chain, which means the criminals move money in a rapid and automated transactions from one Bitcoin wallet to another. So some of these hundreds of transactions are even done like automatically, which is insane. Like even hundreds, thousands of transactions can be done instantaneously. But their goal was to hide the source of funds to trigger any red flags. And hundreds of false accounts were created, which is also identity fraud. And what I've been reading more in the past, regulators did not know much about how to deal with these things because, again, it's new. Like banks, regulators don't know. Like, okay, we see this, but we're not familiar with this. How are we going to deal with this? So I think, especially after this case study, from my research, I've seen that there has been, from the regulator side as well, more investment in technology, blockchain surveillance tools that, okay, there are things that we did not know and we don't know how to deal with. So technology can get into the picture here so that we can prevent future stolen crypto, but in addition to banks being the victim of this. So in the next step, what precautions banks can take to prevent becoming victims of crypto fraud? This is also similar to what we usually talk in regular compliance, but it's very important to have strong KYC and CDD procedures, like knowing your customer, knowing their expected activity, knowing their source of funds, source of wealth, expected activity, the countries that they transact with, the jurisdictions that they deal with, and having a strong management transaction monitoring system, especially supported with latest technology that is updated on a regular basis to create alerts if there's something unusual going on. And I know that most of the participants here are from like one of the largest banks in the world. So of course it's impossible to do one by one, but there comes into the use of technology to have a strong KYC monitoring program, transaction monitoring program, and integrate it to see anything suspicious, especially regarding crypto, is coming. And one other thing is it can also even be a part of the technology providers. Okay, maybe we should add another alert that includes crypto, like transfers coming from a crypto firm that is above the regular transaction activity of this client might trigger an alert. As we all know, there are tunings for transaction monitoring system at banks on a regular basis. So this might be something to consider, tuning the transaction alerts and what triggers that alert, the scenarios should be updated that is on a regular basis to keep up with the technology and the criminals, because they're usually a couple of steps ahead of the regulators, unfortunately. Another thing, partnerships with crypto forensic companies. I know that not every bank does that. They might not be willing to do that for different reasons, but it's also a good option to do, because sometimes like if you there are a lot of companies out there, and if you were to partner with a crypto forensic company, they can help you to see that, okay, this comes from this exchange, and they can show you the movement of funds if we are not talking about privacy coins. Or they can say that, okay, Balke just transferred, let's say, $100,000 from Coinbase. But then crypto forensic companies can see how that fund before it came to the bank traveled like on blockchain when the actual transaction happened. Was it an account? Was that $100,000 worth of Bitcoin was in my account for 2 years? Or did I just receive it last week from an unknown privacy coin, immediately transferred it to Bitcoin, and next week it's at my bank? And as a bank, I don't know much about it, but if I can see the trail of it, I can say that, okay, there's something wrong with Balka's account because this is not usual. And also the rapid movement of funds is suspicious. That's where we come to the next one, is customer education. That's why customer education is very important. Some customers think that, okay, this is a great opportunity. We can make a lot of money from crypto. They see stuff on social media, like opportunities, ads come up, especially like people who don't know much about it, but they're very easily becoming victims of the scammers as well that Matt initially mentioned. So it might be creating customer education documents, or like making them aware that, okay, this is going on and you should be aware when you are dealing with a technology you're not very familiar with or you are not very well educated with, and here are the risks that you can become a victim, which one of the biggest risks is identity fraud as well. And this is another, I want to give you another case study, which I wanted to use the joint statement from three US agencies. I know that most people here are joining from Europe, but Office of the Comptroller of the Currency, OCC, Federal Deposit Insurance Corporation, FDIC, and the Board of Governors of the Federal Reserve System. So they established a joint statement in February 2023, and they literally warned the banks, saying that there is a liquidity risks to banking organizations resulting from crypto assets market vulnerabilities. And in overall, what they said was, you need to be aware of these risks. You might be aware of the unique or heightened risks that require additional risk management practices by banks when you deal with cryptocurrencies. And they also encouraged banks to implement their existing risk management when it comes to crypto as well. like do not separate crypto from regular transaction, implement your risk management principles on that too. And when it comes to, I have four more points when it comes to regulatory expectations. One is allocating more resources to AML teams regarding crypto as well and the improving technology. Stronger training for sure. Possible upgrade of automated monitoring systems, which we already talked about, and requirements to bolster compliance audit expertise. And also, for example, FinCEN of USA, they explicitly require financial institutions to identify and report any suspicious activity regarding the use of virtual currency through suspicious activity reports so that they can collect information coming from different banks and maybe find and see the bigger picture if crypto exploitation uh, is exploited. So another case study I wanted to talk about is the Safra Bank order by the OCC in the US. So in 2020, Safra Bank of New York entered into a consent order with OCC because they said, the consent order said from 2016 to 2019, bank opened accounts for digital asset customers, which consisted of cryptocurrency-related money service businesses, without sufficient consideration of the BSA AML risks and failed to implement the necessary measures to address these increased risks. So as a result of this consent order, Safra Bank agreed to take extra precautions, to take necessary measurements to address these risks, and maybe do not deal with money service businesses and cryptocurrency related MSBs that are posing heightened risks to the bank.